All right, it's time. Sit down. Let's get started here this morning. So here we are on this Monday morning. It's April 8th, 2024. Spoos are up about 10 handles. There's just over 2.5 minutes to go to the cash open. Oh, what am I looking at this morning? Not much. I mean, there was some pretty decent activity in some of the overnight trade. Still doing 224,000 contracts. The bond market's obviously rocking. So the bond market, does anybody care? You know, the bonds, a lot of people obviously will be looking at this. The bonds are tanking. I would not disagree, but there's a bid back under the bonds, at least temporarily this morning. We're doing what I would term catastrophically large volume the last week inside of the bond market. It's huge, man. Huge, I tell you. Yeah, and again, this morning, almost 200,000 contracts. I mean, again, the bond market's trading almost as much as the S&Ps. Anyway, with the S&Ps, as we come into the open this morning, with the S&Ps, look, I wouldn't assign a lot of directional bias. If you hadn't looked at the overnight trade, we've been all over the place. I know everybody's looking at the S&Ps; they're rallying again, but it's pretty meager rally. The Nasdaq is not catching fire here this morning. And it's been pretty sloptastic. Overnight trade has been chopped out, broken, disconnected, and you're going to see some more of that here into the cash open. Dollars off very slightly this morning. That's also fairly critical. Hasn't had any big sell side activity. We're going to discuss that quite some extent along with gold. Gold begs the question, what the hell is going on inside of gold? It's a pretty good question, isn't it? What in the hell is going on inside of gold? I'm going to start with that one. A few stocks that are bid this morning. Tesla, this is news on Friday. Microsoft this morning, just looking at the usual suspects. Microsoft this morning is actually slightly down. The financials this morning are largely unchanged, maybe bid a little bit. The energy sector this morning, there's nothing going on. That's why I said, like, you could see the S&Ps, but there's just nothing going on. I wouldn't read into this tape, the open. We're going to open up in a very sloptastic manner, but there is a hint of sell-side activity hitting the tape in the last few minutes. Let us come to today's cash open. So at the bell, as I said, I was looking for a sloptastic cash open and define sloptastic. How about this 50-50 advanced decline line? Does that define it well enough for you? Boeing, he's filled. I thought we had fill on that one. So let's get that email out and going over here. If you haven't filled on Boeing, you're going to. So Boeing is filling for over a 55% gain. I filled $1.81. And get another one of those working. Create duplicate order. Okay, let's try for $1.82 in here. I'm just going to get some stuff working this morning. Wow, the $1.82 filled. So we're teeing this one up. All right, so early fill this morning inside of Boeing. Let's hope that that stays down. Trade them if you got them. Let's just put this in here. Make sure everybody sees it. Okay, so the Boeing trade is effectively over and done with. We're going to work everything we can to get out of that. All right. Hopefully some of you guys are filling on those right now. So onward and upward. Sorry, a little distracted as I'm trying to get executions on that Boeing trade. A couple of different accounts over here. So the S&Ps this morning, as I was saying, opened pretty slop-tastic, about a 50-50 advanced decline line. Look, I know that the ticks are positive right now, but I'll be very frank with you. I wouldn't read into the ticks. Let me take you into the tape really quickly because there's some important movement on the screen. As I was saying, like Tesla's got a bid under it, but interestingly enough, Meta does not. Meta's actually seeing some sell-side activity. For those of you that have actually um, for those of you that are taking a quick glance at Meta, this thing has had very few days of sell side activity inside of the last week. It was one of actually, if you take a look at auto expected moves, this is one of the primary reasons that we bid back at the end of last week, Meta and Meta itself. Today's sell side activity, possibly unwarranted. Like I'm not giving you 10 reasons why I think it's selling off, because I got to be honest, I have no idea why it's selling off. I don't really care either, but I will tell you that is going to cool the Nasdaq expressly for today and probably pull down the S&Ps if there's any continuation in there. You're also seeing trade activity in Microsoft and Apple. There's nothing big going on, but I'm going to tell you right now, all of these. This is pretty much out of the blue. They had bids this morning under them. I mean, look, Apple, Microsoft may get a bid back up, but just to make a quick point, look where Microsoft was this morning, trading at the 426 level, taking a little bit of a hit. I'm just surprised to see them in the red after they were green all throughout the overnight trade. So we'll see what kind of becomes of this in the first few minutes of trade. There's no activity inside the options marketplace inside of Meta, none. NVIDIA, as I've said for the last 3 weeks, NVIDIA has really largely died out. Its implied volatility is also getting annihilated right now. It doesn't mean it's coming down, though. I mean, you can see it. It doesn't mean it's coming down. But for the last 3 weeks in here specifically, we have noticed nothing about so much, its movement, but much more about the implied volatility, that the implied volatility has literally, we marked the day where it hit peak implied volatility. Implied vol got crushed, and that was the end of the rally in there. I think you have to expect again, NVIDIA is going to have still some very wild days, possibly this week. And those wild days, what I mean by wild is some sell side activity. Now we've bid back up from everything that this marketplace has basically thrown at us, but we are coming off of a week that we had just about a $60 down move, a little bit less than that, $50, $60 down move. Again, there was a hint of sell side activity in the air until Friday. There was a bid back under us. Just take a look at the Nasdaq out of the gate this morning. And this is why, I came in this morning and I said, don't have a lot of preconceived notions. This is going to be chopped out, fast, disconnected trade. And that's exactly what we're seeing right now. And again, I'm surprised to say that tech is seeing selling. Real quick, Google has been rather unstoppable for a period of just about a month right now. We'll watch this today because it looks like, once again, it has a bid back under it. Nice. So some people are getting some Boeing fills. Boeing has already got a bid back under it. That's not necessarily going to preclude you from being able to get a fill. It's one of the reasons, like, it's, when you're only 5 minutes into a trading session, it's so hard to get filled in that first couple of minutes of trade. Like, there's a lot of price action in stocks, and kind of got to wait before you just, I don't like sending out a text message right in the first like 5 minutes of cash open, like 10 minutes in, just to get everybody kind of settled down and so forth, and make sure everybody can get filled on there. I obviously have not filled all the contracts in there. I'm still holding on because I want to make sure we get the message out, and then I'll get filled after that. So there's not much, okay, that I want to point out that isn't like in motion right now. And what that basically implies is, look, there's a little bit of selling going on in tech. See if it grips hold. You're not, this is not going to be a marketplace that you're going to be able to look out, more than a few minutes, at least right now. One of the other aspects that I'm going to discuss pretty extensively this morning, and I hope everybody kind of tunes into this one, has a lot to do with the implied volatility. if you have not looked at the implied volatility, okay, I know you're looking at the marketplace right now and it's massively unchanged. Remember, just a few minutes ago, the S&Ps were up 11 handles at the open. Now it's unchanged. You're coming off of a really volatile week. There is a feel, okay, that was missed in this last week of trade. And I cannot express this enough. And I'm going to make sure that everybody understands, okay? There is this feeling that volatility is really, really low. Actually, it's not. Even if you, like a lot of people look at VIX and so forth, well, even if you look at VIX, well, okay, this is actually some of the highest VIX that we've had. In fact, it is the highest VIX we've had year to date. You're in the highest volatility construct, okay? When I say construct, I'm not just talking about the VIX, I'm talking about the entire volatility structure, okay? You're in the highest volatility that we've seen sustained at this point. And take a look at short-term volatility. That is by far and away the highest volatility that we've seen. There's been glimmers, okay, glimmers of higher volatility, but nothing sustainable. So one of the things that I think you want to come in here and let's get this out in the open right now is simply you're in a much higher volatility marketplace than you were, like, for instance, 2 weeks ago. And if you don't shift gears, you're going to get your head taken off in this marketplace. Okay. One of the things that people categorically have a tough time with is just that, it's shifting gears. Okay. So whatever you might think over here, right now, we're in the highest volatility we've been. And the irony is, like, the market hasn't really done very much. What, there was one day of big sell side activity, but still my heart. Okay. But you're in a higher volatility right now. The vol structure has completely changed. Okay. And there's one thing that really, really resonates with me. Okay. And that's this. Can you explain, even after, and let's see if anybody can explain this, even after Friday's rally? Friday, we rallied 58 handles to the upside. So Thursday, we were down about 70. Friday, we got all but 12 of that back. Why did volatility not crush? Does anybody have a reason for that? Okay. Anybody have a reason? Vin was saying there's some thinkorswim platform issues this morning, maybe. I'm not noticing it, Vin. Okay. It's you. It's not me. Been waiting for that one, Vin, for a while. Anyway, why is there higher volatility right now? Hey, you know, my coffee tastes like crap. This coffee tastes like crap. I don't know what's going on over here this morning, but this coffee tastes like crap. So first of all, okay, zero DTE. Tim was mentioning zero DTE. Interestingly enough, zero DTE options are not seen by VIX. VIX is an equation that uses SPX options, and those SPX options, VIX cannot see anything that has less than 9 days. It's an averaging formula, and it averages basically anything in and around, but it's a 30-day, it's not a 30-day moving average. It's a 30-day time weighted average. Okay, there's a real selling going on right now inside of Nasdaq. So the fun thing of VIX, okay, and by the way, this is kind of a leading question a little bit. It's a loaded question too. But the fun thing about VIX is you can say it's CPI, you can say it's Bank of Japan, you can say all these things. The answer is yes. Clearly, the volatility sees something. The bottom line is when you rally back up 58 handles and that vol doesn't crush, you should be a little bit concerned at that point. If volatility doesn't simmer down today or tomorrow, okay, you got problems. Now, we all know, okay, that volatility is forward looking because we're not talking about historical volatility. Historical volatility, okay, is the past stock price movement. We're talking about implied volatility, 30 days, okay, out. Volatility in the marketplace is elevated, okay, pretty heavily too versus where it has been. I mean, there's just nothing else to say other than here's where the year started, okay, and here's where volatility presently is. All right, I'm just trying to draw a straight line over there, but you can see we are absolutely in the highest, okay, vol that we've been in. Bear with me here for just 1 second. We're going to get this Boeing order out. So want to make sure that we're good to go. So we're selling the 90s, buying back. Those are April 19th. April 19th looks good. Nah. Here we go. We're going to send this one out. There we go. 55% gain. I'm going to come in here. I'm going to create a duplicate order. I'm going to work my last one at 82 cents and work that. This Boeing's already up a buck. Well, we'll see if we can get filled. Anyway, as we come into this, so volatility right now, and again, I wanted to spend a few minutes on it because I know I want you guys to understand something. I said it's kind of a loaded question and a little bit of a leading question, but the fact of the matter is there's a ton of different reasons the volatility is up right now. I mean, but those reasons were there, okay, even a few weeks ago. All right, we had CPI coming out a few weeks ago, which it always does. Oh, whatever. The volatility wasn't this high. The Fed was speaking a few weeks ago. The volatility wasn't this high. Okay. I see a couple things that really have changed in the marketplace. One of the things that's changed in the marketplace unequivocally is the bond market. This is the lowest the bonds have been, okay, in quite some time. By the way, it's always weird, but this is actually the year right there. These are rolls right there. Okay. So that's actually the year. We are by far and away the lowest we've been on the year inside of the bond market, which implies interest rates are higher. So I think that plays a pretty significant role. In fact, I'm even going to, put up some notes over here. So like rates, okay, again, interest rates, are they impeding upon this marketplace lately? Not really. Okay. I mean, look, we're just kind of brushing it off a little bit, but this is where, there's constant discussion, by the way, constant discussion about interest rates to the point of like nausea. Right? People are just making crap up talking about interest rates right now. Okay. The only thing that matters though, when it comes to interest rates is it going to impede upon S&P progress? Right now, it hasn't. However, we are seeing volatility in the marketplace considerably higher. So that's got to be, okay, one and probably number one reason that volatility is a little bit higher. Okay, what else have I got? One thing that really, really bothers me, and I'm serious when I say this, is the second thing that really gets me over here is gold. Now, I've talked extensively about the dollar lately, okay? And the dollar, by the way, would be right in this conversation. The dollar looks incredibly defensive, which is, by the way, and I'll just put it up here because the dollar is going to be number 3. Okay, gold. Let's go over to gold, and then we'll actually talk about the dollar for a moment. If you take a quick glance at gold, okay, I'll just zoom that on your chart there. Okay, this thing has been straight up. Now, let's talk about a couple reasons gold is up. Okay, maybe inflation is coming raging back. That obviously would impede upon like rates. Rates would be right there with it. We could probably talk about the dollar, but the dollar has not been down. The dollar's actually been up with gold up. Okay, to me, I mean, and then you have to look over of course, at number 4. Whoops, that's a big 4. That is the ugliest 4 I have ever seen. We gotta fix our 4. Okay. This would probably be oil or energy. All right. These 4 aspects kind of coupled together. And again, I know we're showing gold over here, but if I brought up energy, energy is going to look just as wild. Okay. I bring up the energy sector. Here, we'll curve fit. There we go. There we go. It's the same thing as gold. Whether you're looking at energy or oil or the dollar or gold or interest rates, okay? One of the things that I just want to bring to your attention, as I said to you, it's a loaded question why the volatility or why the VIX is higher, okay? Those 4 aspects, they can't be good for the marketplace, okay? I mean, right now you have a marketplace that still continues to hold on to basically all-time highs, higher interest rates, Gold is exploding higher. The dollar is incredibly strong, and oil and energy is screaming to the upside and possibly screaming that inflation is coming back. I mean, the interesting and ironic thing is all four of these are completely intertwined. And that's actually why I think that there's a considerably higher volatility at this point, because these four factors were not there even a few weeks ago. They weren't. Okay. The dollar wasn't where it is. I mean, a few weeks ago, gold hadn't fully broken out. And I'm talking about a few weeks ago, like the beginning of March. Like, gold hadn't broken out, energy hadn't broken out. The dollar was just whatever. Nobody cared at that point. Those four factors, though, I think are going to continue to keep volatility relatively high, which also implies some pretty wicked moves coming to the S&Ps and Nasdaq. Okay. And that is one of the things I wanted to start with here. So by the way, there's energy, which energy really broke out. I mean, really broke out at the beginning of March. Okay. If we looked at gold, okay, gold, I mean, it broke out a couple of times, but the biggest and most fierce move yet just started in like late, March. Okay. Late March, even into like early April. This move over the last like 2 weeks has been phenomenally large. To put this in terms of auto expected moves, okay, you're not going to see that in gold product very often. In commodities and so forth, you'll see it, but gold, metals, that's two major breaches of expected move to the upside. Okay, two major breaches of expected move. And again, you can go back and you take a look at gold for a long time. You're going to be hard pressed to see any type of move as significant, other than if you, I mean, by the way, gold, there's a huge history of gold, but gold, you got to go back to significant events to see gold move this much. It's, to me, if anything, one of the most bothersome things that you see on the screen. Look at this move right here. By the way, this is, I'm on a max chart, okay, but this is a monthly chart. Is there any other place? Like you see what is a magnificent rally back here, but this is purely vertical right now. Okay, pretty alarming to see such a significant move without the S&Ps being impeded upon. All right. So again, I think those four factors. So if you're sick of hearing about interest rates, I'm right there with you. If you're sick about hearing about interest rates, you should be, because it's not just about rates. Okay. Rates right now are portraying that inflation might be coming back. Great. Tell me something I don't know, but I don't like that gold continues to rally, right? Maybe it comes off a little bit, cools off. It doesn't matter. I think the damage is done. It's been inflicted already. Oil, okay? We all know that oil can sell off, but if you look at the first quarter, okay, of Q1 of 2024, oil was $70 a barrel, is now trading almost $90 a barrel. I think you have to have a little bit of concern about inflation coming back, but the entire energy complex, look at the rally. Okay. On a year-to-date basis, it's up 15%. It's so wildly inflationary. It's just, it's sick. And then we talk about, the bond market. Forget about the damn bond market. Just look at the interest rates. Okay. TNX, by the way, TNX started the year in and around 4%. Okay. We're almost 4.4%. These are big moves. Okay. This is not as wild as some of the moves we saw last year unequivocally, but okay, they're big moves. And this one could actually break out. At this point, I think the concern in the bond market is that the bonds could, break down even further. We'll see. We'll see how this one goes. Okay. Can't stress enough, though, that you have to couple everything that you're seeing on the screen together. Okay. And again, somebody's going to mention, of course, there's China and there's geopolitical risk. I get it. And but that's factored into rates. It's factored into gold. It's factored into oil. It's factored into all of it. That's, let's not, you can't really, I think, discuss or preface like geopolitical risk, because the fact of the matter is you're not going to be able to handicap that one at all. Anyway, it's those factors, okay, that I believe are the driver behind VIX. And VIX is pretty serious right now. Again, there's not too many times in the history of volatility that you'll see the S&Ps, which rallied 58 points on Friday, and the VIX didn't budge. Okay, you can look back historically and you're not going to find too many of those instances. So we're not just at a strange place in the marketplace. You almost have to put it as a historic place in the marketplace. And again, I'll remind you, zero DTE has nothing to do with VIX. Okay, the whole volatility structure is funky right now, real funky. I think that the word pissed off is probably even better than just funky, because a 16 vol in a marketplace that hasn't really had any selling is weird. It's really weird. You would more or less kind of think that the vol would be like 10% or 11% right now. But I wanted to spend a few minutes, okay, and take you guys through that, okay? Because again, it's not what you think, it's what you know, right? No one gives a damn. Jamie Dimon did interviews this weekend. Nobody gives a damn. Guy's been wrong. I couldn't believe when I actually saw his name mentioned in there, okay, about markets and forward looking, what he thought of the economy. It's Jamie Dimon that actually thought the economy was going to tank, and that was in 2022, okay, specifically. So stop listening to garbage. Look at what's right in front of you, all right? And you don't have to listen, okay, to like what I might think about the future of the marketplace, because that doesn't matter to you. What you should listen to is that's a high volatility for a marketplace that isn't moving. So mark my words, markets don't, okay, do nothing in a 16 VIX. And a 16 VIX, historically speaking, isn't high. It isn't a high VIX, okay, historically speaking, but it's really a high VIX for a market sitting at all-time highs. That is a little historic, if you will. So a lot of factors in here, okay, that, like, again, stop listening to garbage about interest rates, stop listening to garbage about what people think about the economy, because it was the Jamie Dimon stuff, it was splattered all over the financial media, okay? But they didn't mention that, the guy's been dead wrong every single, quarter since 2022. But don't worry, according to him, there's a soft landing still coming. I'm waiting. There was a hard landing 2 years ago, but now he's actually considering a soft landing. Okay, I can tell him where to go land. Jamesy was mentioning CNBC used to rely on Jack Welch for those kind of interviews. Okay, how did that turn out for him? We're not allowed to mention Jack anymore. Okay, we're not allowed to mention. Obviously, things went south there very, very quickly. He was accused of some improprieties. Let's not get into it at work. Okay. NVIDIA is actually seeing a little bit of sell side activity. Sorry, I'm cracking up about that. So Jimmy was saying in here, dollar, okay, is up against other currencies. It's down relative to gold. Yeah, but the sheer fact that the dollars, by the way, as a whole, dollar is up on the year. That's the only point I would make. So dollar is up. And by the way, this is dollar versus, like, I think it was the 6 biggest currencies, but the dollar is up. And but gold is absolutely ripping on a year-to-date basis. It's always strange to see dollar up and gold up. I was thinking about currencies though the other day, and yes, the dollar is higher versus many other currencies that are lower, but you also have to realize that your dollar, which is this, okay, its buying power still sucks. So it's kind of like, Brandon Chapman would do this a little bit better, but are you listening, Brandon? You better be listening. Anyway, let me make sure we get that text message out here. Okay. If Brandon were listening, he'd probably appreciate this. Would you know it? If all fiat currency around the world was being devalued systematically at the same time because of debt. And people don't realize, because you're not seeing the dollar go down in value, but the dollar is clearly not worth as much because there's inflation. So it's a weird thing to think about, but I've actually used this phrase a million times, but our crap is still better than their crap. So we've spent in the United States the last 50 years substantiating the dollar to be in a position to where even if there was massive debt loads in the US, okay, and the dollar was going to crash because your dollars aren't worth anything, it would take everybody's currency down first. Everybody would still come back into the US dollar and prop it up. And it's interesting because everybody's talking about right now, the dollar's coming apart and this, okay, and yet it's rallying, okay. But you could probably make a good argument that all dollars around the world, okay, rubles, whatever the hell you want to call it, okay, we're not allowed to talk about rubles, yuan, you're not allowed to talk about that either. All of it, okay, is just paper that could be worthless. Can you tell if all dollars are worth less, okay? And you have to look at like buying power of what? Maybe gold, right? And then you look back at gold, you're like, that's an interesting thought. Okay, all right. Yeah, it's exactly what the U.S. has done. It's 50 years of preparing our crap to be better than your crap. Okay, whatever crap that happens to be. But when you start thinking about the U.S. dollar, okay, I actually like have these conversations in my own head at night, and I'm like, if you had to get out of the U.S. dollar, where are you going to go? I'm not trying to be facetious. Where are you going to go? And I know a lot of people are like, I'm going to buy gold. Listen, I grew up around traders, okay, that were like, Tom Sosnoff. I grew up around traders like that. They were like, gold. In the end, it's all going to gold. I'm like, are you going to eat that gold there, Tom? Huh? How's that going to work for you? So yeah, you can go to gold or whatever. Okay, and also Brandon is that kind of crazy over here too. But the truth is, you probably wouldn't really recognize if dollars around the entire world were being devalued all at once, unless you saw gold exploding higher. And it might be a damn good indication that there's a bigger problem out there. We got a debt problem. Please. They're going to figure out a way to kick that debt problem down there till I'm, 105. I don't think I'm going to make 105. Not sure I want to make 105. But anyway, you get the point. Because if there's debt issues in the United States, doesn't matter. People will still actually take their money. You can't go into the euro. Like, there's just no way. There's no way, like, I'm going to, I stay up late to think about like buying the euro. I'm probably not going to be buying Chinese dollars right now. Okay. Where else are you going to go? And it's difficult. Okay. You wouldn't even want to go to, I like what Joyce said, emeralds. Like, you think about diamonds, they make that crap in the lab now. Okay. I know they're not as good. No, they're better. They're better. They're much better. They're real and they are spectacular. Is that what you were looking for, Joyce? Anyway, it's not easy to figure out where capital should go for safety, because that's why we call it, systematic and or systemic risk. S&Ps right now look like they're going to come back down just a little bit. Hey, this has been in less than inspiring moment right now in the marketplace. Okay, let's look at some of the individual stocks and a few individual products around the marketplace, and we'll talk about a couple of positions in here. Did anybody have an answer for that, by the way? I was kind of curious. Anybody have an answer? Where do you go? Where do you go if like currencies are being devalued? Okay, obviously you can buy gold. We figured that one out. You can buy silver, but there's not too many other places to go. Okay, I actually like the silver trade as well. I've been looking at that. Okay, by the way, I don't know if you guys saw this, but in like the last quarter, like how many hundreds of millions of dollars of gold were bought through Costco. It's scary. Okay, that'll actually freak you out. Go look that up. Okay, gold at Costco is just being acquired at an alarming rate. So it's good stuff. Real estate, the dirt. Okay, I like RJ. RJ in Texas. Really? RJ in Texas says ammo. I never could have guessed that answer for somebody that's from Texas. You would actually expect that for somebody in Arizona too, which, all right. And by the way, you're going to get through the eclipse just fine, everybody. I've never heard so much conjecture around a celestial event. It's a freaking eclipse. We've all been through it before. Check it out, man. I got my eclipse glasses right here too. Yeah, no, well, I had to buy eclipse glasses for the kids. So There were like 6 packs of them, all right? Okay, I am ready to go. You cannot see a damn thing through these. We went outside yesterday, though. We had to practice. We had to practice for the Eclipse. It was like duck and cover. No, put the glasses on and don't start peeking out the side of the glasses. This is the conversations you have with a 9-year-old that has worse ADHD than I do. Okay, put them on, leave them on. Don't try to peek out the side. You okay with that? And he's like, no. And I'm like, maybe we shouldn't let you outside. He's like, that's probably a good idea. All right, continuing on. By the way, I like what somebody said about real estate. Tax liability, it's actually a good thing. Okay, Tim, are they certified? I mean, come on, I bought them on Amazon. What could possibly go wrong? And I would bet anything that the second I'm done with these, okay, my wife is probably going to return them to Amazon. That's all she does. We don't actually acquire anything on Amazon. We acquire it and then return it. I never even get to see it or use it. It just gets sent back. Okay. Yeah, they do pinhole viewers. They're doing a bunch of stuff. I'm actually going to go over to their school in a little while. That's my day from about 10 to 12. So here in, I'm here in Arizona. We're doing it's about anywhere from 65 to 70%. There's no totality. I'm sorry. Okay. For the geeks that are like heading up to places like Buffalo. Okay. Look, no one ever goes to Buffalo ever. And they've never been to Buffalo. But like 1 million people are going to go to Buffalo. I think there's only about 200,000 people living in Buffalo. Anybody here from Buffalo? I mean, you got a decent football team. I'll give you that. But that's all you pretty much got going for you, other than freezing your beep off the entire time. Buffalo would probably be like in cloud cover. But I have a great observation deck also here in the house. S&P is coming off a little bit again. Let me, by the way, Matt C was testing with your cell phone flashlight. We were actually doing that yesterday. We were doing a lot of stupid things yesterday. Many, many stupid things, burn some magnesium in the backyard. I did that, If you guys have never seen like magnesium burn, it's fun. It's fun. I take the little magnesium shavings, light things on fire with them. Okay. Hey, it's completely safe. But if you want to know if your glasses are safe, burn magnesium in front of them. I highly suggest it. It also, you want to get some amusement out of kids, do either magnesium or like the thermite reaction. Oh, thermite, it's the greatest thing ever. Really is. Okay, sorry. I'm cracking myself up. You can do amazing things with thermite. Continuing on over here, the S&Ps are down a massive 2 points. So kind of conversation piece. Today, let's go to the SPX and then we'll talk about some individual stocks. I swear, I'm going to focus on the market. Focus, okay? Focus. There was a time where I didn't do like a business degree in college. I went to college to learn how to make things like thermite. That's what I did, hard sciences. Okay. Oh man, I can put on all kinds of fun stuff and okay, explosions in the backyard. It's all supervised. It's all supervised. Okay. I wear my special protective goggles. It works for me. Okay. 2 things to understand about expected move this week. First of all, the expected move is huge. Look at last week's expected move. It's about $62. This week's expected move is plus or minus, let's just round it, $89. Okay, about an $89 expected move coming off of a $62 expected move. You have an $89 expected move. Actual move right now, massively unchanged. But this is, and again, I want to make this clear that that's the weekly expected move. But here's actually the crazy part of this. The crazy part, okay, is the daily expected move. Now, if you're missing that, okay, you realize today's expected move, okay, is actually $35. That's big. Okay, it's really big. So to sit here and to think that the marketplace is not going to substantiate a move today, I think would be a huge mistake. So if you're looking at this and you're thinking inside trading session, inside what? Inside, by the way, basically means, okay, less than maybe the last 2 days, I would agree with that. This is a $70 move. This is a $58 move. Okay. Right now, you're sitting though on $35 of anticipated movement on a Monday. That's big. Okay. It's a very, very substantial move that's being implied in here. In fact, if we still go over to the SPX right now, take a look at today's options in the SPX. They've crushed the volatility down, but it's still 20%. They've crushed the expected move down, but it's still 22 points. That does not, though, diminish the fact that the overall movement is about $35 in the SPX. So there is huge movement being priced in exclusively for today, not tomorrow. Okay, speaking of tomorrow, so on Monday, this is Monday, obviously April 8th. There's your expected move. You can see your expected move for what? Tomorrow. And here's the crazy stuff. Wednesday morning is CPI, $61 between now and Wednesday. This is getting big. Okay. If you're not comfortable with your risk, I don't care at this point whether you're bullish or bearish. It does not matter. But if you're not comfortable with your risk, you got to wrap your arms around the idea that a marketplace is sitting very close to all-time highs, and it is very close to all-time highs with almost a 90-point expected move on the week. It's something that you got to focus on a little bit because again, it's big. It's big, and it's not something to be taken very lightly. So in the overnight session, we traded all the way down to 52.36. We're nowhere near it. The marketplace you're thinking right now is leaning a little bit lower, but it's not. Okay. The ticks are basically a moot point. The advanced decline line has not moved this morning. The only thing, okay, leaning on the market, when I say leaning on the market, I mean the only thing seeing some sell side activity in here, okay, you have a little bit, just a little bit of NVIDIA by 0.5%, okay? Tesla's bid by 4%. There's no surprise here. Tesla was up. This is the announcement of robo taxi, okay? So robo taxi is the announcement out of here. By the way, the announcement for Tesla and robotaxi is that the announcement is coming out, I think on, was it August 8th? So this is total, Elon Musk at his greatest here. He's announcing there's going to be a robotaxi, but the announcement doesn't come to August 8th. But he needed something to probably spin the stock around a little bit. So he announced that there's going to be an announcement. Gotta love that too. Anyway, there's a bid back under Tesla. I don't think it's really making much of a difference. Google basically sitting at all-time high right now. Okay, but there was a hint, just a hint of sell-side activity in a few of the tech stocks. That's gone. Okay, the only hint of sell-side activity right now would be in NVIDIA or Meta. All right, both of those are actually just down about 0.5%. Okay, and interestingly enough, they're kind of weighing on the market just a little bit. You've now got energy down. Just so you guys are clear, energy, that's the first day that we've seen down, okay, to really any extent in weeks. I mean, these moves down here were so negligible, okay? There is big expected moves in here. It's important. By the way, everybody now is going to be filled in Boeing. Everybody now is filled in Boeing. So if you're not out of the Boeing trade, you need to get out of it. Okay, we filled better than 55% in here. Just to display like volume and open interest, you should see our volume kind of sticking out like a sore thumb in here. Not these should definitely fill. Okay, right here and here were our trades. Okay, I'm shocked there's only 300 contracts trading in here right now. So I apologize here and here. I'm just going to create a duplicate order so everybody sees it again. Okay, it's the April 19th, it's the 90.87.5, the 90.87.5. Okay, I know that we had, see, this is where we sent out text messages. People didn't work good till canceled orders. We have at least 1,500 contracts open in here. Okay, of the open interest, you can see there's like 1,686 open if here. We have like 1,500 of those. And I'm saying we, meaning that all of us here at TheoTRADE, we send out these trades that kind of track some of the open interest. And sadly, only 300 and some odd have actually filled. Okay, that's not good. It's not good at all because unequivocally, you know that you can fill. I filled, okay? We sent out the text message and I filled substantially later, okay? If you look at my fill times here, right at the cash open, okay? This is literally 10 seconds into the cash open. This is 40 seconds into the cash open, okay? This is what? 40 minutes into the cash open. I traded at 81, 82, 82. So everybody that needed to get filled, okay, had the opportunity to get filled. And we sent out that message over there. So I think some people are kind of asleep at the wheel. Hopefully everybody be able to get out. That leaves us, by the way, with 0 in-out spreads on. We got hot in in-out spreads in the last like 3 trades. We hit XLE, XHB, and now Boeing for profitable trades in the last 3 in-out spreads. I will continue to look for opportunities. I mean, we traded XLE bullish. This is one where you want to get bearish in here. I'm scared. Hold me. Okay. I'm also still flirting with the idea of Apple, but Apple, damn, the earnings are in the way. I'd love to bear up an Apple. Okay. But when I say the earnings are in the way, if I did the trade in Apple, it'd only have to be the 18-day expiration. And the problem is in the 18-day expiration, there's $5 wide strikes. I don't really want to do it. Okay. I don't like it. I wanted to like it, but I don't like it right now. Okay. Speaking of some of the banking stocks, banks are going to have earnings later this week. So earnings coming up, JP Morgan, I believe it's JP Morgan, Citi. Citi's got earnings coming out, right? And again, this is all on Friday. When's Bank of America? Bank of America, JP Morgan obviously is the biggest one. No, it's not Bank of America. Okay. Goldman's usually like the week after too. So shopping around, and nobody cares about Wells Fargo. That's on Friday, but it's JP Morgan, Citi, Wells on this Friday. Everything else is usually like a couple days later. Okay. Boy, that S&P is, I have to tell you, for a $35 expected move in the day, that thing is sloptastic. Let's go look at some other stocks, and then we'll talk about a few more positions. There was news specifically on Micron, and I'm rather surprised to say that this one is actually reversed and reversed huge. So from the cash open to right now, the stock's only up 1%. This thing was flying in pre-market. Again, flying in pre-market to the tune of almost 130. That's a big reversal inside of Micron. Well worth noting. Micron is also through its earnings announcement. So this is and could be a tradable opportunity. I don't think I've sent out a trade on Micron in years. It's probably 4 or 5 years since I've actually done any trades in Micron. Micron, though, could be a great opportunity for some type of an in-out spread, excluding the week that had earnings. Breach of expected move, big reversal right here. Okay. Any follow through to this would make a very, very nice in-out spread, bearish in-out spread. We don't have to worry about earnings in here. I don't like that there's $5 wide spreads. I would probably have to use something with like 32 days to expiration here. Probably have to use something like the weeklies. And again, all I'm trying to do is build a spread that's reasonably priced, and this one sucks. As I pull it up, I'm like, this spread just, pricing in here sucks. Okay, this thing should be skewed in our favor, and it's not. So Micron right now is a no-go. There's a slightly inverted implied volatility skew in Micron. So I'm going to let that one, leave that one alone. So Micron, even after some decent news, by the way, the news is they're raising prices at Micron. Yay, they're going to raise their prices by 25%. Don't worry, that's not inflationary. Okay, so we've talked to, we're pretty much blue in the face about gold. Okay, again, doesn't matter what you think. Like, this is where I keep saying this time and time again. Stop thinking, okay, and start realizing that is some type of impending risk. VIX is some type of impending risk. Oil is creating some type of impending risk. I think that's the way to take it. We've talked already a little bit about Tesla. Okay, I was going to bring up Tesla. Some of its price action lately has been very dull. The only trades that I have on Tesla are catapults. I have catapults on Tesla. My catapults on Tesla are bullish. I have 39 days remaining in that trade. We'll see how that one actually plays out. Okay, so I am waiting very, very patiently in there. Got a nice bearish trade though on Meta. I'd like to see that thing die. Okay, die Meta, die. That would seriously do it for me. Okay, so we're done with that. We come back to Boeing for a second. Boeing, not only did we have an in-out spread on here, Boeing had, well, they're being investigated. Newsflash, they've been investigated. They've been under investigation, but now they're going to be further investigated after a Southwest Airlines issue. So let's go look over at Love. Love stock is not being impeded upon. Okay, important over here. It was down quite substantially this morning. Everybody assumed that they were going to be investigated. No, the FAA is actually going right to the root cause over here. It was just part of like, the engine cover. I don't know what the hell you call that thing, but it's good video when it ripped off. Can't make this crap up because it's like every weekend we're seeing some of that. Okay, every single weekend. By the way, that for some reason, like I have just no fear. Like I want to sit in the exit row seat. Okay, I'll take the video when the door gets sucked out. Just hold on to my phone, man. Hold on to my phone. Did you guys see that? The guy that lost his phone with the door that got sucked out? They actually found the phone and the damn thing still worked. It says a lot about the phones. Okay, was it an Apple phone? I don't know. But the phone got sucked out at like, I don't know, like 20, 30,000 feet and it survived. Granted, okay, terminal velocity was hit in the first couple seconds, of it falling, but it's good stuff, man. It's good stuff. Did he have a good case? Okay, I bet he did. I mean that should be advertising right there. Phone fell from 30,000 feet. Freaking still works, man. Okay, so yeah, I do like my Airbus. Okay, I like the Airbuses too, but like that's just the airlines mainly. What I mean by that is the configuration in the back of the plane. Okay, like if you fly like American Airlines just wants to torture you as much as possible. So the configuration for the Boeings, it's not pleasant. It is not pleasant. Okay. Somebody told me it was an Apple phone. It's freaking amazing. The phone gets sucked out the window, falls. Again, I don't know if they were 20 or 30,000 feet yet, but yeah, that happened. If that happened to you, let me guess, you're not going to end up as well as the phone did. Okay, so we have about 10 minutes before we're bringing on Jeff Bierman. There was, so anyway, Boeing under investigation again. So I've talked extensively about this. The only thing I would say about Boeing, the opportunity in Boeing is a break under this 180. So I didn't, this is a Catapult portfolio. Bear with me here as I bring up some other portfolios. Okay. I have a new account. By the way, I opened up more. We got Moore's accounts, more accounts. I'm done with opening anything at, I have a Boeing Catapult as well. And it's starting to work. So the Boeing Catapult is up about 20%, 74 days left. And the idea of the Boeing Catapult is that Boeing is going to crack through 180. And here's the interesting thing. So catapults, you don't have to care about earnings. Screw it. You can carry catapults for 80, 90 days, right? And the fact of the matter is I'm going to pass through earnings. If their earnings suck, okay, that trade could be golden. So there's a little bit of a conversation piece though in there too, because if the earnings are really good, then Boeing could rally, but the S&Ps could go down. So you get some like what we call basis risk between the two of them on the catapult. Somebody said, is the Boeing position one I can roll? Well, it depends if you're talking about in-out spreads. And the catapult one, yeah, you can always roll a catapult, but if it's profitable, like you wouldn't want to roll it just yet. Anyway, I'm less than enthusiastic about this. Oh, the last one today to talk about in terms of stocks that are moving, Taiwan Semiconductor. This has actually been in the news a lot lately. So more money, more funding. They're building more actually right here in Phoenix, Arizona. Just what we need. I think I talked about this a few weeks ago. There's a barbecue place that I like to go to down in Chandler. Okay. And there's just miles and miles and miles of Taiwan Semiconductor buildings. It looks like a never-ending Costco. It's my dream come true. It's a never-ending Costco. It's like the never-ending story. Okay, we're going down. Anyway, that's it for stocks that are, priced in for some action in the news. Interestingly enough, Caterpillar, which has also been relentless to the upside, being offered a little bit lower today. Okay. I don't see anything right now that's having heavy activity. Nothing. I mean, look at the call and put activity inside of NVIDIA. There's just nothing going on in here. Like there's a little bit of call buying going on. I see a little bit. Tesla is probably going to see some heavy call buying. Let's go look at it. Look at that. Okay, sticks out like a sore thumb. 166,000 contracts, can't be wrong. That's some heavy size in here. So there's some call buying going on in there. Apple, okay, there's nothing going on in here in Meta. All right. In terms of Meta, nothing going on. There's no heavy options activity. Even last week, on Thursday or Friday of last week, volume is really starting to pick up in the S&Ps. The options market volume starting to pick up. Again, I don't see anything too wild in today's trade. How many stocks are really a standout today? None of them. I mean, there's no real big standouts in terms of individual stocks other than maybe Tesla. And that's of course, again, it's news driven. Robo-taxi. So my trade though in Tesla, as I was mentioning a moment ago, it's up 33%, but I need the stock above like 185, which is totally plausible. Totally plausible. 185 is like right here. Okay. And earnings are coming up on what? April 23rd. My trade is out all the way to May 17th. So we're in good position on that particular front. I'm not really making or losing much of anything today, plus or minus about $700 is it. So in a moment, I'm going to bring on the professor. Jeff Bierman will be in here in just a minute. Just a minute for Jeff Bierman. It's not quite time yet, but I got to tell you, okay, my chicken is done over here. There's not much to even look at today. I'm a little disappointed in some of the trade activity. Okay, maybe it's the eclipse. That's what it is. Everybody's waiting till after, which makes absolutely no sense. Okay, I don't think traders care. I don't think traders ever get away from behind their screen. Me, I'm going out there. I am going out there. Again, though, I couldn't believe how much news there was over the weekend. And if you read like Twitter, X, whatever the hell you want to call it, I can't call it X. That's just wrong. Okay. Twitter is like ablaze with discussion of like the eclipse. All right. You remember when you look at that, okay, there's still a lot of very crazy people out there. just read Twitter for like, a little bit, read a little bit about the eclipse, and you remember a lot of crazy people out there. It's okay to say that. Okay. You might even be one of them. I'm okay with it. Okay. We love everybody the same way. There's a lot of crazy people though out there. Anyway, with that being said, as the S&Ps meander slightly higher over here, you'd like to say that there's a feel for today. The ticks, though, are not there. The advanced decline line is a pure 50-50. What would be the decisive factor for today? Well, the interesting thing about today is, VIX is not going to come off really today. It's just not. I mean, look, it's headed down. It's down like what? 1% is nothing moving VIX. The decisive factor today, okay, first of all, you have energy down already. It's pretty much at lows. Okay, it's still the technology stocks. Technology stocks are just batting the entire market around like a giant toy. And if NVIDIA gets a bid back under it, the S&Ps will lift a little bit and the Nasdaq will lift a little bit. And that's really, the bigger focus point for today. When nothing else is going on, you're like, look, a 0.3% move to me doesn't even count. Okay. But when nothing is going on, you have to look at big market capitalization, because big market caps, even though right now you see the S&Ps up 6, you're like, yeah, they're going to rally. No, they're not. This is noise. Okay. They're not rallying just yet. It's just noise. The decisive factor in here would be like Meta, whatever, it's down 0.2%. That doesn't even matter. But there is one notable thing. The stocks that have just been wildly bid lately have been Meta. The stocks that have been wildly bid lately, okay, not so much in NVIDIA, but both of those are down today, and both of those are very decisive, okay? Moreover, like Apple kind of feels at this level like it's going to break well through. I mean, it already broke under the 170 level, but it could break some of the recent lows, and that's like 165. That would actually be pretty devastating for markets. I don't know if we're there yet. And as I said, you can see that the ticks are picking up and it's very positive right now. I'm not sure that we have what it's going to take to really catch some fire to the upside today. Okay, I'm less than enthusiastic about some of the trade activity we've seen thus far. So again, we'll bring on the professor here momentarily. The contract size in the S&Ps were probably around 2,700 contracts on average. Okay, I don't think you're seeing very much. Again, I wouldn't get carried away with the idea that we're heading higher here. The Nasdaq 30 points. Okay, really, 30 points is a 1-minute move inside of the Nasdaq. Okay, don't take my word for it. Even some of the overnight trade, some of these moves, even overnight, there's just nothing going on right now. Okay, the bid under the marketplace. Okay, I would count this as real as if we were up like 15, maybe 20 points. But with a $35 expected move today, take what you're seeing right now with a grain of salt. It's not even worth the conversation piece. Also, as I said this morning, more people need to focus on the bond market. They're rallying back up. It's like the whole interest rate discussion is laughable. Okay, it doesn't matter. Okay, what rates are. It doesn't matter. It matters. Okay, how that's going to be implicated to S&Ps. And right now, it's all about higher volatility. There's always, there's reasons for moves in the screen, right? But there's always a very definitive reason for higher volatility, because when volatility is higher, people, that's a lot of money it takes to move vol higher. Okay, and you may not look at a 15 vol as being high vol, but when the market rallies 58 points and volatility doesn't come in, okay, there's a reason for it. So sit back and relax. Jeff Bierman's going to be in here momentarily. He today is going to be talking about a chronology. I can get this one out. A chronology of Wall Street commerce regulations part 2. Oh, that's exciting. Okay. If you hadn't heard this before, the number one reason I got the hell out of the brokerage side of the business was the chronology of Wall Street commerce regulations. Regulations, people. Oh, they're lovely. Stay tuned. Jeff Bierman's coming on right now.